Hi everyone, my name is Tony. I'm one of the owners here at Always Bookkeeping. In today's video, I'm going to be talking about the 5 bookkeeping mistakes that business owner makes every single month. This video is for business owners that feel like they don't understand their books on a monthly basis, and this is not to turn you into a professional bookkeeper. This is to help you understand your books better and what to do on a monthly basis. A lot of business owners only look at the books or um, talk about the books whenever there is a mistake or whenever they need a loan from the bank. This is to make you understand that regular bookkeeping, meeting with your bookkeeper on a monthly basis, helps you avoid the questions that the accountant may have or avoid the mistakes that you can only see at the year end. Point number 1, why good bookkeeping matters. Bookkeeping is not just data entry on a monthly basis, recording your receipts. Good bookkeeping tell a better story of the business and better for the business owner to understand how healthy their business is or how unhealthy their business is. So bookkeeping helps the business owner understand on a monthly basis when the money comes in, when the money comes out, understand the deposits and catch the mistakes that you may not see until the year end. When bookkeeping is handled properly on a monthly basis, the business owners catch the mistakes that happened last week or last month and take care of it before it become a bigger problem at the year end. So the biggest mistake that I see with the business owner that don't have regular bookkeeping is that they had already made the important business decisions throughout the year without proper numbers that they can use from clean bookkeeping. So having a bookkeeper that meet with you on a monthly basis, catch mistakes like where did the deposit come from, where did the expense go to, is very important for the business owner to understand the business much better on a regular basis. And number 2, what you need to know as a business owner. Usually what we do at Always Bookkeeping when we do the monthly meeting with our clients, we look at first the account receivable aging report. We want to make sure that the business owner understand that there are clients that pay on time and there are clients that always late. Usually we look at anything that's 91 days and older to make sure that the business owner contact that client about the outstanding invoice and get paid for those. Or if they are uncollectible, then we usually just expense that bad debts for them so they become a business expense. Another thing that we look at with the business owner on a monthly basis is that the balance sheet and the income statement. We want to make sure that the business owner understand how much money coming in every month and what come out every month. And it's a good touching point for us as the bookkeeper to ask questions. These expenses coming out, are they to pay off the credit cards? Are they to pay off the vendors? For the expenses, are they, for example, the restaurant business, are the expenses GST or not? And all for clients that don't charge GST on specific service, are these invoices have GST on them? So it's a good touching point for us as a bookkeeper and them as a business owner to understand the picture on a monthly basis for their business. Number 3, I'm going to give you an example on messy bookkeeping. A lot of business owners, they don't look at the books on a monthly basis, so the bookkeeper just assume or take guesses on the transactions happening in the bank accounts. For example, if we usually see the deposits coming in, and there's no explanation on what they are, bookkeeper may assume that they are deposits for revenue, and the other can be set for expenses. So if you see expenses coming out, some bookkeepers just assume they are for supplies and material or to pay for tools or equipment. But in reality, some deposit may be considered the shareholder loans deposit or transfer back to the business owner. So it is categorized differently. So when that mistake happens, your revenue or expenses may be overstated. In that case, your financial statements are incorrect and giving the business owner false assumption that the business may be making more money or spending too much money, where in fact some of those transactions could have been avoided by categorizing them correctly in the first place. Now I'll be talking the The five most common mistakes that business owners make is that number one, they treat the bank transactions from QuickBooks Online is what we use at Always Bookkeeping. We pull the transactions from the bank and the clients just treat them as facts, whether or not it's happened in the banks. So what we do at Always Bookkeeping is that we make sure that we reconcile the accounts on a monthly basis based on a bank statement. So what does that mean? It means that even if we pull all the transactions from the bank, if it doesn't happen in the bank statements, whether that would be a deposit or an expense, to us, that did not happen. So we make sure everything reconciles to the bank statements. Second mistake is treating everything the same every single month. For example, the expenses could be a supplies and material purchase one month and another month could be equipment or tools purchase. You can't assume the expense or deposit that happened in the banks. You have to ask the business owners questions regarding those transactions specifically. Mistake number three is mixing business and personal spend within the corporate bank accounts. The risk of that being is CRA may deem those expenses are all personal just because you mix them both. So at the year end, CRA may deny a lot of those expenses and you will have to pay taxes on those expenses. Next one would be to make sure that the business owner read and review the financial statements with you on a regular basis. The business owner knows what happens within the business the best. So when you look at the balance sheet with them on a regular basis, they understand the cash flow of the business, whether, they're spending a little bit too much money on this, or there are payments missing, and for the income statement, which is the profit and loss, they know whether the business make money this month or next month, or they may not. So looking at it with them helps them understand whether the business is generally healthy or there is a cash flow problem. And the last mistake I see the most is not asking questions, whether that would be you as the bookkeeper or yourself as a business owner. So reviewing the books with them on a regular basis and asking questions, make sure that the memories are fresh of what happened last week or last month to rectify the problems before waiting for the year end, where there may not be supporting documents, which is receipt, invoices, or statements from the vendors. So asking questions is the most important thing as a bookkeeper and as a business owner. And here are the practical monthly checklists that we do at Always Bookkeeping with our clients. Is before we meet with them, we make sure that all the bank accounts are connected to QuickBooks Online. That makes sure that all the transactions are pulled from the checking accounts, the credit cards, so that we can categorize them correctly, and we put the questionable items into a specific account. So during the meeting, we can ask them any questions regarding them and they can explain it to us. So the monthly meeting we have with them, we do the checklist of making sure the bank accounts are connected. We make sure that all the bank statements are downloaded so that we can reconcile the accounts according to the bank statements. And we make sure we have supporting documents from the business owner, whether that would be invoices, statements, deposit slips, and so on, to make sure that we have everything needed to prepare for the monthly meeting. And during the monthly meeting, that is the time that we ask any questions that we may have for the business owner. And again, the business owner can ask us any questions regarding their business, whether that would be, is it a good time to hire more employees? Are we spending too much on advertising? Are we spending too much on eating out? Are we spending too much on certain materials? Is it time to look at a new supplier or vendor? So having a checklist as a bookkeeper and having a checklist as a business owner to ask your bookkeeper on a monthly basis is super important for you to grow your business. Again, my name is Tony and I'm here, one of the owners here at Always Bookkeeping. If you find this video helpful and you now realize that you don't have reliable statements to look at on a monthly basis to understand your business better, then reach out to us at Always Bookkeeping. You can book a free initial consult with us, with either me or my business partner Denise. The first initial consult is free. Just go to our website at alwaysbookkeeping.ca. Give us a call at 780-554-8356 or email us at info@alwaysbookkeeping. We'll be more than happy to have the first initial consult with you, free of charge, to understand you better and see if what we can do to help you. Thanks for watching, and see you in the next video.